Hello, this is Japanese Economic Review Channel. Today, we will review the April 2026 monthly economic report from the Cabinet Office. This briefing provides an executive overview of Japan's current macroeconomic status, focusing on domestic recovery, global risks, and strategic implications for the coming quarter. Our overall assessment is that the Japanese economy is recovering moderately. We are seeing strong structural tailwinds, including improving employment and rising real incomes. However, significant external headwinds, particularly Middle East instability affecting energy routes and U.S. trade policy shifts, require our vigilant monitoring. Comparing March and April, the standout upgrade is public investment, shifting from firm to solid, driven by supplementary budgets. Corporate profits and capital expenditure remain stable and positive. Conversely, consumer sentiment shows weakness, and corporate bankruptcies are increasing, highlighting areas of domestic concern. We are witnessing a consumer paradox. Real incomes are gradually increasing, and Q4 GDP consumption grew by 0.3%. Yet, consumer sentiment is weakening. While tangible wage gains exist, global uncertainties are making households psychologically cautious, particularly capping spending velocity in areas like travel. Corporate health shows a sharp divide. Large and mid-cap firms are thriving, with Q4 corporate profits up 4.7% year-over-year. Non-manufacturing capex surged 5.4% as companies invest heavily in labor-saving technologies. However, vulnerabilities are mounting for smaller firms, with bankruptcies jumping to 924 cases in March. The labor market remains structurally tight, with the unemployment rate dropping to 2.6% in February. The severe labor shortage is forcing a structural shift in hiring. Full-time regular job offers are declining, while part-time and spot work demand is noticeably increasing as traditional hiring pools dry up. Inflation is moving steadily through the pipeline. Domestic corporate goods prices rose 0.8% month over month, and core consumer prices are rising moderately at 2.4% year over year. Downstream, a fundamental psychological shift has occurred. Over 85% of households now expect inflation to exceed 2%, effectively eradicating the deflationary mindset. Financial markets have experienced historic shifts. The Nikkei 225 surged from the 51,800 to 59,300 range, reflecting strong corporate expectations. The yen remains historically weak, trading between 158 and 159 against the dollar. Meanwhile, the yield environment has upwardly shifted, with the 10-year JGB yield hovering between 2.3% and 2.4%. Globally, growth is fragmented. The U.S. shows moderate expansion, while India and Taiwan are robustly expanding due to external demand. The Eurozone and the UK are experiencing a slow recovery. In contrast, China is gradually decelerating, weighed down by real estate stagnation, posing a regional economic drag. Our highest priority risk remains Middle East instability, which threatens oil supply routes and global supply chains. U.S. trade policy also lingers as a moderate to high threat to corporate profitability. Finally, financial market volatility and currency weakness threaten to import further inflation. To navigate this landscape, the government and the Bank of Japan are closely coordinating. The Cabinet Office is deploying a responsible, active fiscal policy, executing budgets and crisis management measures. Concurrently, the BOJ is operating a flexible monetary policy to sustain the 2% inflation target and a virtuous cycle of wages and prices. In conclusion, Japan is successfully transitioning out of its deflationary era, evidenced by record capex and rising real incomes. The ultimate success rests on a single race: whether domestic wage growth and labor-saving investments can outpace the drag of external geopolitical friction. Continuous monitoring remains our imperative. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.